In this video, I'm going to talk about what annoys traders the most. Stay tuned. Hey traders, a very warm welcome to you. So, out of a survey of mostly new traders, these were, or traders who have probably got less than 2 years experience, so less than a year's experience. There's a few experienced guys in there, but this is kind of what people came back with when the question was asked of them, what annoys you the most? So let's address these six things that annoy people and maybe offer a solution that can help them out. So if one of these annoys you, then stay tuned because hopefully we'll have a solution for you. Right, okay, number one. When the price gets close to your profit target and then reverses. That was pretty much a popular one. So in other words, you know the score, guys, you have a profit target here, take profit here, market's going in your direction, it almost gets there, then it reverses, and that is frustrating and it annoys people the most. Okay, the solution for that one is to create a trailing stop strategy that mitigates some of that. Okay, it's not going to mitigate all of it, guys. You are going to get times when you have to give back some profit. But if you've got some kind of trailing stop strategy and you focus on that as your exit as opposed to this take profit area, then you may well find that it's more comfortable for you and less annoying, because yes, you're going to give some back and occasionally you're going to get almost there, comes back and stops you out. But if you've got a robust trailing stop or method of taking profits and a trailing method, it's going to be more comfortable for you. One more thing to note on this is if this is happening a lot, you perhaps need to tweak your system to adjust your profit target. Maybe your profit target is a little bit too ambitious. It's probably happening less than you think, because very often we kind of focus on the things that really annoy us the most, and it may be such a small occurrence, but we remember the things that are the most impactful for us emotionally. So being mindful of that. But if it's something happening regularly, just bring the profit target down a bit, or maybe look at where your entry is and when does that occur, and trying to find some sort of pattern that would, you could adjust your strategy to the times when that does occur to allow for a smaller profit target or less of an excursion of moves. So you can make some kind of manual changes for that and some trading plan changes for that, or implement a trailing stop strategy, which works great for the mind, knowing that if you're focusing on that as your exit instead of your profit target and seeing that and being disappointed when it doesn't hit, that's a good way of framing the trade. So that's a good one, guys. When you think it's close to profit target and reverses, two kind of ways of approaching that problem or that annoyance. Number two, impulse trading. Big on this, again, very, very common with many people. They place a trade based on what they believe, what they think, just impulsively. This is something that, I've definitely done in my career, trade impulsively. I think many people have. It's one of the very, very common ones. It all comes down to, as I've kind of mentioned before in other videos, and if you're a subscriber, you've probably seen me talking about this many times, trading plan. If you're not, now's a good time to consider doing so and click that button to subscribe for more videos from me and other guys on the channel. But I've talked lots about trading plan and defining structure for your strategy, how many trades you're going to take, what you're going to take, setups, risk management, position sizing, all that kind of good stuff. It's just believing that that is really the action you should take in your best interest. Impulse trading is really you saying to yourself, I know better in the heat of the moment. I'm going to go outside of my parameters and go wild because I think I know better than I do in the cold light of day when I'm calm and I'm analyzing stuff. And you just need to, take steps and actions to decrease that that feeling and trust the fact that your plan is the best thing for you. You've done it with your best interests at heart. Yes, it's not going to work every time, but over time, if you stick to it and you amend it and you adjust it, you'll get to where you want to go. So it's just little tips and tricks like that to avoid that impulse trading. I wouldn't say impulse again, but you get the idea of that urge. Well, number three, market moving the wrong way after news. You need to reframe this one. What they mean by this is, okay, good news comes out, it should be bullish. The market sort of maybe goes a little bit, then reverses heavily and goes completely to the downside. You need to kind of change this and restructure it into a positive for you, because the people who are getting confused by it are the ones that you can capitalize on and make money by them getting stopped out. So, and this is something I like to do in terms of, unusual, unexpected response trade, I call it. So the expected response is for the markets to go higher. It doesn't go higher, it goes lower, and it goes a lot lower because a lot of people position long or went long expecting the market to go higher, if that makes sense. So flip your mindset around. If it doesn't go, if you're in a position already and you see good news and it's supposed to go higher and it doesn't, forget about what the news is saying, just cut the trade out, cut it off completely, get rid of it. If you're looking to go into a trade fresh and you see good news, be mindful. You need to put the news in perspective or in relation to the price action. Good news, positive price action, all right, I can go in. Good news, negative price action, I need to be careful because there's a lot of confused people out there. The market's confused. And the same vice versa with negative news, positive price action, negative price action going long or short. So, reframing that one into actually something that could be advantageous to you, as opposed to constantly being a victim of that good news, negative price action pattern that often happens. Okay, number 4, fading a trend, and then it gets stopped, and eventually it reverses. So they said this is a common thing. If you're trying to catch that top, selling it, getting stopped out, selling it, getting stopped, and then it reverses. This is purely an operational thing, guys. If that's a strategy for you and you think it can work well for you, you just need to tweak where two things: either 1, your entry, or 2, where you're putting your stop. Easier way to do this is to go back through all of your trades you've done this and say, hey, what about if I move my entry X points, X pips above, let's say we're going short, where my entry was, how would that affect it? Go back and look at it and say, well, actually, if I did 25 pips above it, I would have caught most of them still, but I wouldn't have been stopped out. Or if I move my stop a little bit wider, 2 ATRs, whatever it may be, using some kind of metrics on that, how would that affect my trades? And just literally eyeballing it, and you don't have to go into that much technical detail or back testing anything crazy, and just saying, hey, if I adjusted these 2 parameters, how would that work better for my trading? So, being mindful of that. And also, the obvious one, which we didn't really talk about, is that make sure you're in the right market conditions for that. If it's a monster trend, it's not really the best idea to be fading it, because even though there are little blips and pull downs and pullbacks and retracements, the underlying current is in one direction. And so just be careful of really, really strong trends. Number 5, odd one, this power cuts. Simple solution, guys, is you can get a UPS box, I think they call them, which is like a power supply, uninterrupted power supply. You plug it in, it's kind of a big capacitor. Basically, if your power goes down, you've got, bigger ones will give you a longer period of time, small ones will give you 5 minutes or so, but it gives you enough time to close off all your positions and make sure you're completely flat and you're risk neutral, or you're happy with your positions and your stops are in, or whatever it may be, before power finally goes out. Also, things like redundancy, like you've got a mobile phone there, you don't really need power for that. If you've got a 4G connection, you can often tether that to your laptop. If your laptop is already charged up, you can still trade from that using 4G on battery connection. That's something to think about. But if you've got a big screen, obviously multiple monitors there, you might want to invest in one of those uninterrupted power supplies to avoid that being an annoyance to you. Yes, it's probably going to still be annoying, but it could be less of an annoyance to you if it's not very long, these power cuts. All right, number 6, distractions, boredom. Boredom, you got to be careful with that. That's a bit of a demon, because if you're trading out of boredom, inevitably are not going to be very, very good trades. Go and do something else. If the market's not active, just convince yourself that you might miss something, but you're better off longer term by going to do something else. If nothing's happening, just set your alerts, go away. You don't have to go too far. You can just get away from the screen, and then you won't be so bored. Read a book, read a trading book. Do something for kind of self-improvement, and then wait until you're alerted to bring you back to the screens. I think we've done a video on that before. Go and check that one out. And distractions, this is kind of, pretty much setting down some boundaries. So, you unplug the phone, you put it on mute. If we're trading from a home office, you kind of shut the door, put a note on the door, say, please don't distract me on the notes on the door. Whatever it is, it's just setting some rules in so you're not being distracted and not allowing yourself to be distracted. If it's distractions in terms of internet and stuff, then have a machine you just don't do anything on it. And you can actually buy some plugins and some kind of add-ons for browsers that won't let you go on sites. If you're going on news sites, or you're going on social media, or you're going on sites that you shouldn't be going on, that are kind of entertainment value and nothing to do with work, then you can use those that will block it. Yes, you can get around it, of course you can, but it might just help you stop and think and say, hey, you know what, stop me going on to things and getting distracted because I'm missing good trades here. Let me stay focused. But I genuinely think for both of these, it's splitting your day up if you're day trading and kind of, knowing that trades aren't going to come all the time. And that's the beauty of it. That's where the money is made, is sitting on your hands. So leveraging on that and harnessing that to the best possible way. All right, guys, there's some there. What annoys you the most? Comment section below. If you like this kind of stuff, give it a thumbs up. See you in the next one. Bye-bye.